If you're a Bitcoin holder or you're involved in cryptocurrencies, then you need to hear this. So today I want to make a quick video talking about something that came across my timeline, which I think is very interesting, especially for the Bitcoin holders, but also the overall cryptocurrency participants. So Willy Woo posted something that sparked attention from myself, but also I think there's a lot of interesting points here that you need to learn about. So Willy Woo is a prolific Bitcoin analyst for ever since I can remember, to be honest. I've been involved in the crypto space for the past over 9 years now, but Willy Woo was around for longer than I have, and he has proven himself to get a lot of big ideas and big predictions right for Bitcoin. So Willy Woo made a post talking about the 12-year trend that is now broken. Bitcoin should be valued a lot higher relative to gold. And right now, as you can see, it's not. So for the past 12 years, Bitcoin has been gaining traction over gold. And over the past years, you could buy more ounces of gold if you held Bitcoin long term. This, however, has changed recently and looks like a broken trend. So first mention of quantum on core dev mailing list. This is one of the points that started the reversal of the trend. And what does this mean? Well, the valuation trend broke down once quantum came into awareness. And we had a quantum Bitcoin summit, which was just at the point of breaking the trend line of you acquiring gold versus holding Bitcoin. So this trend has broken down right after those two key events, which is very interesting when it comes to timing. And Willy Woo says likely Bitcoin will be patched with quantum resistant signatures. This doesn't fix the issue of 4 million lost coins coming back into circulation. So people who are talking about protection and protecting Bitcoin itself from quantum computing are not taking into consideration the fact that the very old coins that are mined already, they can't really be protected against quantum attacks. Yes, we can introduce patches, but that will not protect the coins that were basically very, very old and they were not moved ever since being mined or transferred. So the risk adjusted sale 4 million coins need to be priced in. And in Willy Woo's opinion, this is happening right now with the advancements of AI and AGI being one of the main topics within the AI space. Quantum is definitely a risk that's getting closer. And Bitcoin, even though there are patches that could be implemented to protect it against quantum attacks, this doesn't protect the 4 million coins. The market has started pricing in the return of these lost coins ahead of time. This process completes once the Q-Day risk is off the table. Until then, Bitcoin USD will price in this risk. Unfortunately, the next 10 years is when Bitcoin is most needed. It's the end of the long-term debt cycle. It's where macro investors and sovereign run to hard assets like gold to shelter from global debt deleveraging. Hence gold moons without BTC. So if you've been following the overall markets, you would know that gold is getting a lot of attention. And it's not just simply retail investors that are buying in. Countries are increasing their reserves and they are buying a lot of gold to protect themselves against what's coming, which is basically the day on debt. And the debt in various countries and basically around the entire world is skyrocketing to the point where the interest on these debts, the countries that have debt, which is basically all of them, the interest is growing to the point where you can't really pay it back. So that's why we see a surge in gold prices and countries are flocking into gold. But we also see investors in the regular markets going to gold as well, selling things like stocks and buying hard assets. So this risk of quantum is something that we all need to consider, mainly because, as Willy Woo says, this is the time where Bitcoin is most needed. But this quantum risk basically means that the circulation of the coins could skyrocket at some point, and we all need to consider that, because even the past cycle has shown that investing in Bitcoin and buying Bitcoin, DCAing into Bitcoin, has been a great strategy. But what my fear is that we have created so many retail believers in Bitcoin in the past cycle that the next cycle could be maybe broken and could lead to returns that are not sufficient enough for people because of the risks of quantum. I think there is a lot of talk around that particular subject behind the scenes, and the retail investors are not really considering that. So if you're involved in Bitcoin and crypto as a whole, that's something you need to have in the back of your head, like getting 4 million coins in, the quantum attacks start happening. It's something that's gonna reflect in the price, and protecting yourself against such does take time. So big players who are involved in the Bitcoin space really know that, and we have seen the two main events happening which sparked the trend to break. So moves are definitely being made to protect themselves against such a risk. But when it comes to retail investors, that's something that's not been covered at all, basically, for the last months. And it's something that's definitely out there. Risks are always there. And as I said, because we've created such an amount of Bitcoin believers over the past cycle, altcoins weren't performing at all. The retail could start the next run, but I don't think the next run could be as big as the runs we've seen thus far. So this is just a quick video. I think Willy Woo needs more coverage of the situation, and consider these and have it in the back of your head if you're involved in the crypto space. This is it for today, and I'll see you in the next one.